Hello students. So we are continuing from the previous class. So in our previous class, we have seen that what is an advanced tax, what are the criteria, when we are paying the advanced tax, who will pay the advanced tax, and what are the different dates for both the corporate and the non-corporate SEC. Now, when we were learning the advanced tax, we have seen that there may be some defaulter of tax. Uh, the defaulter of tax means if a person is going to pay a tax within a certain period of time on a specific date, now he is unable of to pay the tax, or he don't pay the tax in his will, so he's a defaulter. Or in another case that a person who is eligible to pay the advance tax and who is not paying those advance tax within the scheduled date, then also that SEC is a defaulter. Now we all know that for an individual means the non-corporate, or for a corporate SEC, so there are different dates, means the June, the September, the December, and the March. Within the 15th March is the last date of the paying the advance tax. So if he's not paying his advance tax within those time, then he have to pay an interest in that case. So now we will learn that why, how, what are the rules regarding the payment of interest. So from the screen, we are seeing that interest on tax liability maybe is payable by the SEC, or maybe is receivable by the SEC. Now, what is the fact? Now, if he is a defaulter of the payment, then he will pay the government. In that case, the SEC is the payable. And if he pay any extra amount of tax, then the government will pay him the interest. Or that's a very rare issue. In most of the cases, the government will refund or adjust that amount in the next financial year with his tax payment. So let's proceed. So these are the sections, the 24A, B, C, D, then the 220, 201, and the 244A. But in your syllabus, we have mainly these 234A, B, C, and D. So we will put our concentration and focus on mainly on these sections, and we will do some problems solve with these sections. So let's start with the section 201A. Here, if the person is responsible for deducting tax at source does not deduct wholly or partly under section 192 to 196C, means there is a TDS section, or after deducting tax fails to pay the same as required by the Act, he is liable to pay interest. The interest is calculated at the rate of 12% per annum uh, on amount of such tax from the date of such which the tax was deductible from the date to which the tax is actually paid. So 201 is clearly for the if the employee, the person who got the tax deduction, means deducted the tax from his employer from his pay, then he's not actually paid the tax to the government. In that case, he's eligible to pay the interest at the rate of 12%, and that will be calculated on a monthly basis, depending on the month on which the actual date was, and in the date in which he is actually paying. So it is clearly a section for the TDS portion. Then we are coming to section 220, subsection 2. If any SEC fails to pay on any tax that is other than the advance tax specified on a demand notice within 30 days of the service of notice or demand, is liable to pay interest at the rate of 1% per month or part of month from the expiry of 30 days of the service of notice of demand. So this is not clearly the advance tax. So if he is demanded to pay any other than tax, than the advance tax, then if he fails, means if he default to do that, he pay that. In that case, the interest will be charged only on 1% per month rate. Now this is one of the main section of our syllabus in the interest. For delay or failure in furnishing the return, means the return file, interest 1% on tax liability. Now here, now previously we have seen the percentage of the interest was on the defaulter payment. So here the 1% will be on the total tax liability. And for calculation of interest, the part of month is taken as a month. That will be rounded off in a single month. In case the companies or SEC covered under tax audit from 1st October, means of Section 44. And in case of any other SSE from 1st August of the assessment year to date or furnishing return of the income. Excuse me. Now, for Section 234B, which is a bit more complex than 234A, the same, the rate will be same, the 1% of the rate of income, the 1% per month. And here there is a concept called the assessed tax. Is here if the advance tax is less than 90% of the assessed tax, in that case, the assessee is liable to pay the interest. The amount on which interest is payable will be either assessed tax or assessed tax minus advance tax paid. So whenever we are doing the sum on the 234B, previously the interest was on the tax liability, but here the eligibility totally depends on the 90% of the assessed tax. So if he is paid more than, if his advance tax is less than 90% of advance tax, then he is liable. If it is more than 90% of the advance tax, then he is not liable to pay interest on the 234B. Now, what will happen if he not paid the advance tax? In that case, it will be under Section 234A. So if it is paid and that is less than the criteria, then 234B. If not paid, then it's 234A. Now let's take an example. Now here we are seeing that we are assuming that our tax liability is to be 1 lakh, and it needs to be paid in installments, means the advance tax, as explained above. Assume there is no TDS here, so we have to deduct nothing from the liability. So if he is a non-corporate assessee, means an individual, so the dates are the 15th June, the September, the December, and the March. So the percentage was a 15, 30, 30, then 25. So 50% means 15,000. Then 30% means 30,000 plus 15,000 means 45%. Then once again 30% means 30,000 plus 45,000 means 75,000. And at last 25% of 1 lakh was 25,000. So within 15th of March, he is liable to pay rupees 1 lakh advance tax to the government. Now, how much he paid? In this column, we are seeing how much he's paid. Now look, in each of these columns, the amount is given. So the less figure is the shortfall. In the first case, the 15,000 was the amount he should pay. He actually paid 5,000. So shortfall is 10,000. Now we all know that the rate of interest is 1% per month. So the calculation will be 1% into 3. Now why is 3 months? 3 months means, look at the date. It's 15 June. What is the date of the next installment? 15 September. So June to September, if we calculate, so June to July, July to August, then August to September is 3 months. So that is why it's 1% into 3 months. Then the shortfall amount, the 10,000. So calculation is very clear here. The rate of interest 1% into number of months, that is 3, into the shortfall amount. The amount is 300 for the first installment. The first installment of the advance tax, his penalty will be 300. We're going to the next, the 15th September. That was the payable amount. That was he actually paid. So the shortfall is 20,000. And the interest is 1% into 3. Once again, 3 from September to December. On 20,000 is the shortfall is 600. Then for the next one, the December, the payable amount, the paid amount, the shortfall amount, the interest amount. Once again, 1% into 3 into 40,000, 1200. Now the interesting thing will be in the last month. This is the actual amount he should pay. He actually paid. Shortfall is 50,000. But look at the calculation. 50,000 is no problem. 1% is no problem. Then the one here is the interesting thing. So previously it was June to September 3 months, September to December 3 months, December to March 3 months, but we are staying in the March, and the last date of the tax liability should be clear is on 31st March. So we are actually having a 15 days time in our hand, and in interest we should take that 15 days as a single month. So we have only 1 month in calculation. So that is why 1% into 1 month into 50,000, the amount is 500. So is that clear? The 3 months, 3 months, 3 months, and then the last installment case, that is 1 month. That is 1 month. So its total penalties are 300 plus 600 means 900 plus 1200 means 2100 and 2600. So this interest payable will be rupees 2600. So this total thing is happened with under section 234A. Now here the 234B is continuing. I have told the rate of interest is same here, the 1% on month, but the thing is on the SS tax. So let's take an example on the 234B. That is a bit more complex and conceptual than 234A. Let's say Priya and SEC must pay a total tax of 2 lakh for the current fiscal year, means his tax liability is 2 lakh. The TDS is 182,650. On March, she paid 7,000, while the balance amount of 10,350 was paid on July 20. So that's a defaulting case. So let's start. So here the SS tax is, what is the tax payable to the government is total tax minus TDS. We all know that we will deduct TDS in case of advance tax as well as in case of interest. So that is the 17,350 is the actual amount, the remaining amount. She should have paid at least 90% of 17,350, which amounts to this 15,615. So if he is not going to be eligible to pay the interest under section 234B, so she should clear the 90% of the SS tax, means 17,350 within March 31st. However, Priya only made a payment of rupees 7,000. Hence, she will have to pay an interest penalty on the SS tax. So previously we have seen that it's totally depending on the tax liability. But here we deducted the TDS, that is the 17,350, and then there will be an assessed amount, there's a 90%, whether she is clearing it or not. And if she is not clear it, then he is eligible to pay the advance tax. Now, sorry, the interest. Now look at the calculation. So that is 15,600 because there is a rounded figure. We have not taken the 15 amount because the rule is under the rounding of the rule is will be lower of rupees 100. So it is 15,600 into 1%. We all know that. And there is then this 4 months. Now why it is 4 months? Now, if we look at the sum, then we will see he was paid on July. He paid the due amount on July. So though it is the lower amount, means she is defaulted actually, but she is still paying that amount on July. So we will calculate it from March to July. So from March to July, we know so March to April, April to May, May to June, then June to July. So it's clearly 4 months. So it will be 15,600, the rounded figure, into 1% of interest into 4 months. That is 624. So hence she is liable to pay 624 as a penalty on the interest of the assets tax under section 234B. So hope I can make it clear for you, both the section 234A and the 234B. Now section 234 is a bit easier. So it's like a bit on 234A. Now the interest payable is, we all know that is 1% for every month of the part of the financial year. And the liable tax amount is 30, 60, 60. And the period is 3, 3 and nil. The last one is for the nil. If he is a government, in the corporate employee means the corporate assessee means the company. Now things are all same till the last point here. Now in 234A, we have seen that 1% the rate of interest is. And in these two cases, it was 3 months. So if we go to here, we can see that it was always the 3 months case. In first case, 1% into 3 months into the default amount means the shortfall amount. In second case, 1% into 3 months shortfall. Third one, 1% into 3 in the shortfall. The last one, it was 1% into 1 month. If we move forward to the 234C, we can see that 3 months, 3 months, and 3 months. There's no 1 month case in case of 234C. And if it's a non-corporate assessee, then that will be nil. There is, we are only charging for the 2 times, that is for the 3 months and for the 3 months. And for the corporate assessee is 3, 3, and 3. So calculation is much transparent here. Now you are moving to the 234D, where the refund will arise, where the amount refund granted to the assessees exceeds the amount refundable on regular assessment, or where the refund granted is not due on regular assessment. The interest at 0.5% for every month or a part of month is also considered a month. So here we are getting the interest here. Now look, when we are paying the interest, actually that is the payable to the government by the assessee, that is 1%. And we are receiving, that is 0.5% is receivable by the assessee. 44A, that is interest is payable where in refund arises due to any excess payment of tax. So that's what I'm talking about. When you pay an excess amount of tax, then what will happen? So here the rate of interest is 0.5%, and where the refund is due to excess payment of advance tax, or maybe TDS, maybe TCS, or advance fringe benefit tax, means the ABT, or anything like that, we will get at 0.5% interest. But that is very means rare case. In the most of the cases, I told you that the government will make it refund or make it adjusted in the next financial year. So the same stands for the TDS and the TCS. But look at the point look at the first point, the SSC is not entitled to interest under section 234A on excess payment of advance tax for TDS, TCS, and anything, if excess payment is less than 10% of the tax determined. So look at the funnier thing, that if your tax, the tax is less than the tax determined, then you will not get the interest on that. So whether you will get the interest or not, that will be also decided by the government, and the interest you are receiving is so negligible, that is 0.5% per annum. Okay, so hope you have understand the thing behind the advance tax and the interest. So you will practice the things, and then it will get more clear for you. So in the next class, we will do some corporate tax. So till then, bye-bye.